Hi, I'm James.
And I'm Antony.
And this is Words and Numbers.
Brought to you by the good people at CACI. That's CACI, the Center for American Culture and Ideas. Ant, what's new and exciting in your world this week?
Last month, The Guardian ran a poll asking Americans various questions about the economy, and the answers are really astounding. According to this poll, 55% of Americans believe the economy is shrinking.
When's the last time the economy shrunk for any length of time?
Most recently would have been the lockdown. Prior to that, 2008, the housing debacle. Not only is the economy not shrinking, it's growing by every measure. You can adjust for inflation, you can adjust for population. It's growing on all these counts.
Here's the thing, right? The economy is almost never shrinking.
Yeah, almost never.
It does shrink. It's not so uncommon that it's unheard of, but it's literally almost never shrinking. It could be growing too slowly. Why do you think people are that far out of touch with what's going on?
Oh, I have no idea, but it goes on. 56% think that we're in a recession currently.
Well, I think people don't know this, but recession has a technical definition.
Yeah, yes and no.
Here we go.
The definition most people go by is 2 quarters of negative GDP growth. The reality is a little more complicated, but nonetheless, we aren't even close. It's not even a question. We're in clear expansion, have been for some time.
Is there more?
Oh, yes. 49%, so just less than half. 49% believe the S&P 500 is down for the year.
Now, how the could they think that? You could just look that up.
Annualized, it's up 26%. It's up 26%.
It literally takes no effort at all to find out the answer to that question.
Yes, correct.
I'm guessing there's more.
Oh, there's one more. 49% believe that unemployment is at a 50-year high.
50 years.
Well, it is at a 50-year. It's at a 50-year low.
All right. So if I'm to take a giant step back from every stupid thing you just said, you said a bunch of really stupid things. We've got half, roughly speaking, of the American people who literally have no idea what's going on.
No, they have no idea. My guess is that it comes from they spend too much time watching the news, which is going to tell you bad stuff, and that's going to just translate into how's the economy doing? Oh, the economy must be doing horribly because there's all this bad stuff going on.
Here's something we're going to have to talk about in the not too distant future, say maybe before November, just picking a month out of the air. Is it time to start thinking about qualifications for voting?
You know, that's something my father has long said, and kind of write off things your father says. And the older I get, the smarter he becomes.
Well, there are clear and obvious reasons, given our history, why we don't have qualifications for voting. Right, because they were used in our past, and they were used, broadly speaking, after the Civil War to keep blacks from exercising the vote, the franchise.
Yeah.
And clearly, anything that has even a whiff of that in it is never going to be possible. And it may be the case that putting a qualification on voting of any kind will never pass muster here. But when you hear things like this about how woefully uninformed half the population of the United States is, and let's be honest, it might be a fair bit more than half.
Yeah.
And look, of the two of us, I've been the one putting my heels in the sand saying, no, we can never talk about that. I've always been the one. You've been more willing than I've been for years to think about and talk about these sorts of things. The longer I live, the more I think maybe I've been on the wrong side of this for a while.
You know, I think there's a good argument here. If you have the power to take from your neighbor, and that's what happens when you vote, there should be some qualification. You should be able to demonstrate that you know the basics about what you're doing. Or alternatively, you know, an interesting idea would be that instead of voting for the president, we elect people and let them vote for the president.
If only someone had thought about that at some point in the past. Anyway, I think, maybe let's put this on the back burner to think about for a while.
I'd like to come back to this come November.
I kind of would. And look, maybe right before the election, or hey, maybe even right after.
Mm-hmm.
I never do this because I know what happens when I do this, but I'd like to hear from our listeners on this. Drop us a line. Would you like to hear about this? Do you have an interesting thought on this? Please don't send manifestos. Just, a couple of lines would do.
Do you get manifestos?
I do get manifests.
I haven't gotten a manifesto in a long time. Of course, I haven't checked my campus mail in about 3 years. So that's probably why. The manifestos never come by email. They always come by snail mail.
I've tried to keep my address a bit of a secret since I moved. It's a very poorly kept secret. People have found it. It's not hard to find. I have been threatened. My family has been threatened. These sorts of things happen. But I would like to hear baked and half-baked ideas on this. Yeah, the half-baked ideas are fine. I think what I just had was a half-baked idea.
Yeah. Should everybody vote?
Yeah. Should we prevent them by dint of law from voting? That's a harder question to answer than first appears to be the case. So
harder in one sense, and yet easier in another sense. We don't think twice about telling 17-year-olds they can't vote.
Well, that's because 17-year-olds are stupid. Oh, wait a minute. Wait a minute. We do other things with constitutional rights, right? We tell convicted felons they can't have guns.
Right. Are they allowed to vote, convicted felons?
I think sometimes, but sometimes not.
Huh.
It's always more complicated than it looks to be at first. Anyway, I've got something. So you go to political things and I go to economic things. It turns out, Ant, you know that the government and car insurance companies, they're always interested in how many miles you drive, right?
Right.
And we, as a people, tend not to tell them because we don't want them to know. Because the more miles you drive, the more you're going to be charged.
Mm-hmm.
You're going to get charged more for automobile insurance. The government's going to want to charge you for the roads. And this became an issue not too terribly long ago with people who are driving electric cars, right? Because who pays for the roads? Everybody was paying a usage tax in the form of a tax on gas, right? The more gas you use, the more you pay. Simple, straightforward, slam dunk. Till all those people, at the behest of the government, in no small part, decided to drive electric cars and even hybrids and got all kinds of breaks, tax breaks typically, so that they could find their way behind the wheel of one of those cars. And the minute the government was successful, it realized that it had created its own problem. It wasn't gobbling up as much tax money as it once in the form of a gas tax. And on this stupid story goes. But your driving right now is actually being scored. Are you aware of this?
No, but how? By whom?
Everybody's driving is being scored. The by whom part of the question, it gets a little more difficult there because there's a vast answer. And the answer, broadly speaking, is by apps that you yourself installed on your phone.
Oh, by the phones. Yeah, sure.
Not only are you reporting to any number of apps simultaneously, typically, how many miles you're driving, when, how fast you're going, all the data that a government or an insurance company might want. Not only are you giving it to them, you don't even realize you're giving it to them. It's just happening. And they're creating massive databases. What do you think's going to happen when somebody figures out how to operationalize those databases?
Yeah.
It's coming back in the form of increased taxation and in the form of user-based insurance.
I'm not so concerned about the insurance thing. The government thing concerns me a little bit. But here's the thing with the insurance. They're doing one of two or maybe both things. One is they know that people lie about how much they drive, so they can run some tests, figure out the truth compared to what people say, and automatically make that adjustment. Whatever number you say, they just multiply it by 1.3 or whatever it is. The other possibility is they just take you at your word and say, okay, you're lying, but so is everybody else. So everybody's reporting, for example, they drive half as much as they actually do. So the insurance company just charges you twice as much as it would otherwise on a per mile basis. So everything comes out in the wash. I don't think there's going to be any change with regard to insurance. I do see a big change with regard to government taxation, however.
Yeah, you're going to get a per mile charge sooner or later out of this.
Yeah.
Sooner or later, that's what's going to happen. And when that happens, they're not going to drop the gas tax. They're just going to add the per mile charge.
Oh, right. Yep. Taxes never go away.
They never go away. That's right. So get ready for that. It's coming. But it was a really interesting story, and I'll get the link into the show notes for you. Have a look. I'm sure, Ant, you're going to be fascinated by this, as will a number of other people. From that, Ant, we go, of course, to the foolishness of the week. And it's no secret that I think, what's that word I often use to describe Laura Trump? Do you remember?
No.
Oh, it's moron. Laura Trump is a moron. And you know that she has been installed as the Republican National Committee co-chair.
Mm-hmm.
Well, turns out the Republican National Committee co-chair, indeed the Democratic counterpart as well, these are not pointless positions, right? They actually do things. And the Republicans right now, it's kind of interesting, right? Because I think we would both admit, at least I would cheerfully admit, I really don't have much of a clue what's going to happen with the presidential election. Do you?
I really don't. I'd say my gut is 55% Trump, 45% Biden. I don't mean that as the vote. I'm giving it as the probability.
I work with exactly the opposite, but with exactly the same statistical breakdown. In my mind, I'm about 55% certain that Joe Biden is going to be president.
Mm-hmm.
What we don't think about all that often are all the downstream races, right? You have to think about all the House races, all the Senate races, and these candidates are very typically funded by, in no small part, the Republican National Committee and the Democratic National Committee, the Republican side of which Laura Trump is now co-chair. And, you know, now that you've moved back to the DC area, you're probably more in tune with local politics there than you once were. And look, we all know that Republicans have a very hard time winning much of anything in Maryland,
Mm-hmm.
right? Maryland is a dead blue state, except there's this guy, Larry Hogan, who is very popular former governor of Maryland, Republican, and he's now running for the Senate. And does he have a great chance of winning a Senate seat in Maryland? No, I don't think that's fair. Does he have a chance of winning a Senate seat in Maryland? Yes. Yes, he does. Except Laura Trump is going to war against him.
Why?
Because he's not loyal enough to her father-in-law.
Oh, for God's sake.
It's so bad that Brit Hume referred to it as political malpractice.
That's a great phrase.
Say what you will about Brit Hume, I will tell you that he is an incredibly intelligent man.
Mm-hmm.
And when he says things, I listen because he knows what he's talking. And Laura Trump said that Hogan, quote, this is a quote, doesn't deserve the respect of anyone in the Republican Party at this point, and quite frankly, anybody in America. What kind of help do you think he's going to get from the RNC? I'm guessing none. And Brit Hume says, look, we all know that in a place like Maryland, say, for example, a Republican candidate is going to have to say things that are simply out of step with the national party. How on earth is that surprising?
She's chair of the Republican Party, but is more concerned with people being loyal to her father than she is with Republicans actually winning.
Sounds almost like her father-in-law.
Good God.
And that's about where we are with that nonsense now. So Laura Trump, foolishness of the week. Way to go, Laura. Way to go.
For one-stop shopping for all things James and Ant, visit our website, wordsandnumbers.org. We give a special shout-out to our Patreon sponsors who help us keep the lights on. If you'd like to contribute, go to patreon.com/wordsandnumbers.
We've got something more interesting to talk about in the global banking universe, yes?
Yeah, you know, my new job has me thinking much more about banking and interest rates and inflation than I ever did before. I mean, not that I didn't think about them before, right? But one of the things that I think people are unaware of is, you know, we went through this bout of inflation in the U.S., but this wasn't strictly a U.S. problem. At the same time that we were hitting like 9-10% inflation here, UK was at 11%, Germany was at 9%, Canada was at 8%. This was a global phenomenon, you know, minus a couple countries on the edges. And so the other countries' central banks did what the Fed did. They started this quantitative tightening, driving interest rates up to fight inflation.
Before we continue, can I ask a question? And I honestly don't know the answer to this. Did any other Western country, I guess let's just say did any other country, cut checks for its people?
I don't know the answer to that. I would imagine that cutting checks was something that was done in other countries as well. How widespread, I simply don't know. I mean, you can't just shut down a modern economy and expect people to fend for themselves.
Yeah.
But the fact is, the other countries' central banks did what the Fed did. They do the quantitative tightening, which basically means they're raising interest rates to rein in inflation. And the question in other countries, as here, is when are the central banks going to relax and cut interest rates? And everybody's concerned about this because, you're buying a house and you're waiting until interest rates come down to get a mortgage, or you're a business, you're looking to purchase equipment and you're putting it off because you've got to borrow to purchase the equipment and you're going to wait till interest rates come down. So everybody's kind of like holding their breaths, waiting for interest rates to drop. And what happened is last week, over the course of a 2-day period, first, Canada's central bank dropped its interest rates or announced it was dropping its interest rates. Then the European Central Bank did the same thing.
Is this going to introduce an interesting arbitrage option?
It is.
Am I going to be able to go borrow money in places that have low interest rates and then invest it here in high interest rate instruments?
Yeah, to what extent you can do that, I don't know, because the interest rates we're talking about are basically short-term rates. But nonetheless, as we speak, today is Tuesday. Tomorrow, Wednesday, the Fed will announce its latest plan, whatever it is, to raise rates or lower rates or leave rates the same. And all of the smart money, and by all of it, I mean like 98% of it, is on the Fed keeping interest rates where they are, which is going to open up this interesting situation where Europe's and Canada's interest rates, short-term interest rates, are lower than those in the U.S. And as you say, it opens up possibly arbitrage situation, but more directly, what's going to happen if you get lower rates elsewhere, higher rates in the U.S., it gives foreign investors an incentive to invest in the U.S. instead of investing in their foreign countries where the rates are lower. So we're going to have an influx of at least short-term capital into the U.S. economy.
I think somehow this is going to teach American politicians a very bad thing.
The way to get foreign investment is to hold your interest rates high. But here's the interesting thing, because there's a whole, and you and I said this way back at COVID when they're closing down the economy, and we said you can't just shut down a portion of an economy because an economy isn't a supply chain. It's a web, and you touch one piece of it and you're going to affect all kinds of other things. And so too here, there's a cascade of things that are going to happen if we end up in this situation where interest rates are higher in the U.S., lower in foreign countries. First step is foreigners start investing in U.S. securities because U.S. securities are yielding a greater return. But to invest in U.S. securities, you first need U.S. dollars. So there's going to be an increase in the demand for U.S. dollars. That's going to alter exchange rates.
Yep.
It's going to make the U.S. dollar more valuable. And, people might say, well, that's good. The dollar's more valuable. Okay, well, it's good for some people, bad for others, because the fact is, if you are a U.S. importer, you're happy with a strong dollar. It means that foreign goods are less expensive for you. But if you're a U.S. exporter, this is bad news for you, because the greater the value of the dollar, the more expensive it is for foreigners to get hold of dollars, and so the more expensive it is for foreigners to buy your product.
Right. So maybe I'm not going to be able to borrow money in foreign countries and invest it here because honestly, that's never going to happen. The spreads are such that I'm not going to be able to make that work, not as a little guy investor. But if we're ending up in a position where the dollar is becoming more expensive, that means there will come a time when I can buy foreign currencies very cheaply.
Yes, that is correct.
And I can buy them, hold them the way I would hold a stock or a bond, and just wait for things to even back out again.
Yeah, but see, here's the thing. You hold the foreign currency. You don't want to just hold the currency because inflation eats it. So what are you going to do? Well, you invest it. Well, the only place you can invest in foreign currencies is in foreign securities, but the interest rate on those is lower because of they cut interest rates and we didn't.
You're not being helpful. I'm looking for an opportunity here because there are opportunities every time you get this disconnect in markets.
Yeah.
And yet it gets very difficult to figure out what it is.
Yeah, there are opportunities. I think what happens in this particular case is the opportunities are such that you have to basically be an investment bank. You have to be an entity that is borrowing and lending gargantuan sums of money, and you're doing it for very short periods of time. By very short, I mean anywhere from, maybe a month out to as short as 24 hours.
With a team of people in-house who specialize in doing exactly that.
Right. Institutions like that are very interested in fractions of a percent, Because if you can borrow $1 billion at a fraction of a percent less over here and invest it at a fraction of a percent more over there, it's only a fraction of a percent, but you multiply it by $1 billion and all of a sudden now it's a decent amount of money.
The problem is you got to have $1 billion to start with.
You're right, exactly. Yeah.
Kind of cuts me right out of the game.
Nonetheless, we are going to see an inflow of capital into the U.S. It's just probably not going to come from people like you and me. It's going to come from big investment houses.
And when that happens, you will see, and this contradicts what we talked about before when we were talking about what the American people think about the economy. You're going to see a fair amount of economic growth as a result of this.
Yeah, you'll see investment come in, and anytime you see investment come in, you're going to see growth going on. You're going to see, depending on how long this lasts, more growth in industries that are associated with imports into the United States. So retailers, for example, Walmart is going to do nicely here because a lot of the products it sells, it imports. It's going to be able to import them more cheaply.
Let's make an effort right now to say all else equal. We are not telling you to go buy Walmart stock as a result of.
Yeah.
If everything else were exactly the same, they would do better than none.
Yeah. Now, on the flip side, you've got U.S. exporters. They're not going to be having a nice day because of this. It's harder for them to sell. But then you get this weird thing like consumer electronics in the U.S. The U.S. is a major exporter of consumer electronics. So the dollar becoming more valuable makes it harder for foreigners to buy U.S. consumer electronics. It's more expensive. So you say, well, that's bad news. Except that's not the end of the story. A lot of what goes into the consumer electronics are parts, materials that are imported into the U.S. And so it becomes cheaper to import the materials that we use to make the consumer electronics. So now you're kind of left with the story of, okay, well, is this good or bad for U.S. consumer electronics? And the answer is it depends on which effect is greater on the export side or the import side.
Yeah, but it's probably more or less a wash.
As far as the consumer electronics companies go, that's a decent bet. But one of the winners here is going to be U.S. consumers because they already have U.S. dollars. So the change in the value of the dollar isn't affecting them, but they are going to benefit because the inputs that go into the consumer electronics are now cheaper. So that means possibly lower prices.
American consumers are likely to win big too if they happen to travel out of the country.
Yes, that's correct.
That's probably the biggest win.
Now, a lot of this that we're talking about, whether it actually plays out, I think depends on how long we live with this disparity in interest rates, U.S. versus foreign. If the Fed cuts rates in the third quarter or even early in the fourth quarter of this year, you may not see the stuff that we're talking about. It may be the case that businesses just bite the bullet to make it through a couple of quarters and go on with business as usual. But if the Fed maintains high interest rates here into next year, which is for various reasons we could do another episode about, my guess is continue with high rates until early 2025. Then you're going to start to see these effects.
We've talked about rates moving forward, and it is, at least it was, our best estimate. You could call it a guess if you want to be less charitable. But our best estimate was that interest rates are going to remain high for years, not months.
Right. This was back when. Mm-hmm.
I don't think this really changes that. I think this might put a little downward pressure on it for a bit. All the fundamentals that we're looking at, I think, lead to a conclusion that we are very likely to see rates stay high for a very long time, at least compared to the 0% rates that we saw functionally for so long.
I think so. I think it's because the Fed wants to make hay while the sun shines. It pumped up the money supply with all those quantitative easing that happened during COVID, and it's desperately trying to get the money supply back on track. By my figures, given what the Fed's currently doing, we'll be back on track by early 2025. Now, the problem is, if we hit recession, all bets are off. The Fed's going to have to drop interest rates to stimulate the economy. So this goes back to make hay while the sun shines. So long as the economy is looking strong, and it really is, despite the polling numbers from The Guardian, right? Employment was up last month. The economy is growing by all measures. So long as that persists, I think the Fed's going to keep holding interest rates high.
And that's a continuing loss for an entire generation now that keeps complaining they can't afford houses.
just hang on. Two things. One, we're not going to be at these high rates forever. Two, the people who are bemoaning the high rates in part are doing so because in their memory, rates have always been near zero. But if you go back a generation, they weren't.
I actually did some digging on this not too terribly long ago, and it's almost always been the right move in long-term thinking to buy a house the minute you can afford the payment and then refinancing it as soon as the rates go down.
Yeah.
Even if it's an 8% mortgage, which is absurd given that we were at 2 3/4 not more than a few years ago. You still might be better off biting the bullet, paying it, and waiting the interest out as you live in the home.
Right. Yeah.
That's a tough pill to swallow.
Although I found in the last time I looked at refinancing, interest rates were around 5% or so. During that period, interest rates were falling, and I kept looking like every month to see is it worth it to refinance. And what I discovered is banks had cottoned on to this, and they said, oh, yes, we can refinance you at this lower rate. And they say, kind of in little, parenthetically, we'll roll the closing costs into the mortgage. Well, unpack that a little bit. And what you find is the closing costs, what they're going to charge you to roll over that mortgage is about what you save by having the lower rate.
Imagine that.
Right. Yeah, right.
As a guy who did refinance, boy, it took me a minute to work my way through everything that got thrown at me. They made it needlessly complex.
Oh, yeah. I found the biggest win in having a mortgage is crossing that line when you can get rid of the mortgage insurance. All you have to do is build your equity up to a certain level. Yeah, it saves you a chunk of money, doesn't cost you anything to get rid of it. It just goes.
I've actually never had mortgage.
Oh, really?
At least I don't think so. Now that I think back on it, there was one house that I did.
Yeah, I remember asking the bank or whoever it was I was dealing at the bank. They said, okay, we'll charge you whatever it was. I think it was at 5.5% interest then. And then there's this extra cost for the mortgage insurance. I said, hang on a second, what is mortgage insurance? And they said, well, if you don't pay your mortgage, the insurance company reimburses us the thing. I said, okay, so that makes this, from your perspective, a riskless loan. Why am I not paying treasury bill rates? Why am I paying 5.5?
I remember pointing out to a banker as I was filling out the forms for a mortgage that it was actually in their interest for me to default on the loan immediately, to have no money right now, because I've just put a massive down payment. They're on the hook for nothing.
Right.
They could actually get the house, sell it the next day, and pocket my entire down payment.
Right. Yes.
It was not in their interest for me to keep paying on the loan. They would make more, actually, if I just died.
Yeah.
And the woman looked at me and she said, well, that's right, of course. She went on and on and on about how she didn't want me to fail or die.
Uh-huh. Right. Yeah. Well, she personally may not have.
She might have been the only one in that boat. Yeah, here we are.
I thought I heard once upon a time that banks would take out life insurance on the mortgagees. Is that the case? Do you know that?
I've heard that. I don't know if it's true or not, but I have heard it. And it would make perfect sense to do it. But, if that were the case, that would have been happening long before banks started packaging and selling homes.
Mm-hmm.
People don't even know this. There was a time when you took out a mortgage at your local bank and you made your last payment to that same local bank.
Oh, yes. Yeah, you walk in with your little mortgage book that's all tattered because you've been using it for 30 years. Yeah.
That no longer happens. I think at least 4 different companies have owned the loan that I have on the house I'm in right now.
Yeah, it is not even clear what it means when you say they own the loan, because mortgages now are bundled together in a pile and then sliced up. And so it's possible that an entity owns a slice of your mortgage along with a slice of other people. I don't know the details of that.
I just know who I make the payment to.
Right, yeah.
What do you think this all comes to look like? Give me your best guess a year out.
Yeah, my best guess is the Fed tomorrow does not change interest rates.
There's no way they change this. No way.
The conventional wisdom is one cut in the third quarter, maybe another one, or maybe the first cut in the fourth quarter. My guess is no cuts this year at all, unless we head into recession. We get back to business as usual sometime in the first quarter of 2025.
And how long until we see a 4% mortgage again?
4% mortgage? If what I've said plays out, I would guess mid to late 2025.
I think that might be a bit optimistic.
It may be. Depends on all kinds of things. How aggressive the Fed's going to be in turning around, how cautious. It's going to depend in part on what happens in this next election.
In the election with Ukraine, for example, does Russian steamroll there and then head straight into Poland?
See, and that's the interesting thing, James, because the further you go out into the future, the less the economics is at play and the more the other things are at play. The economics just takes the back seat to whatever else is going on.
We always talk about the typical risks of both daily life and international politics and things like that. And those are both short and long term. But economics, the way we're talking about it today, is a reaction to what's happening right now.
Yeah, right.
Economics is a discipline that concerns itself with the long term. But we are really talking about what's going to happen in the next week and a half and then the next quarter, these sorts of things. And those are much easier to predict than something a year and a half away.
Right. Yeah, absolutely.
For our listeners who maybe can't conceptualize that all that well, here's an exercise for you. Take a look around at your life right now, something you understand really, really well. What was your life like exactly 5 years ago? And how different is it 5 years ago to right now? Only your life, nothing else. Now predict 5 years from now, and you'll realize you really can't do it.
You know, that's funny because you've asked me that question before over many years, and I find myself subconsciously doing the same thing. I look backwards 5 years and say, oh, I've come along nicely. I'm much better off today than I was 5 years ago. But when I look the other direction, I think, oh, yeah, 5 years from now, I'll be the same as I am now.
You're only half right at best.
Right. Yeah. Yeah.
You might be not at all right, but you know, who knows? And you might be not at all right in two different directions. But this is invariably true of all of us. Our lives 5 years ago are incomprehensible compared to our lives right now. You wouldn't want to go back in most cases. Now, in some very unfortunate cases, a spouse might have died, right? Some big picture thing like that, which is even worse than the normal kind of change. You know, I'm dispositionally conservative. I don't really like change in the first place. I think everything would be great if it just stayed the same all the time. Intellectually, I know that not to be true.
I was talking to a friend of mine today who said somebody asked him an interesting question, talking about, you know, lives getting better. And the person said, how many screens do you have in your house? And as soon as he said it, I'm thinking, oh my God, 1, 2, just from where I'm sitting, I can see 4.
I have 6 in this room.
Yeah, I've got 4 in this room, and I can think of at least 3 others in the house, probably more. And now think back to when, you know, we were 20 years old. When I was in graduate school, I know exactly how many screens there were. It's 1.
And it was bulbous, and it was heavy.
Right,
and we watched TV on it in the evenings. Right,
yeah.
That was it.
Yeah.
Yeah. Well, anyway, interesting times. It'll be good to get back to this in a couple of weeks, a couple of months, and in a year to see how it all shook out. But of course, the minute we do that, we'll look forward and we'll get the exact same shrug of the shoulders answer then. We won't know any better than we do now.
And that's all the time we've got this week on Words and Numbers. Until next time,
send us email, wordsandnumberspodcast@gmail.com.
Try to be nice to one person who doesn't deserve it. Till next week, can't take it easy.
See you next week, James.